Yes, land was a very good investment back in the days, but right now, even though you buy land, it just holds cash. Before it appreciates or before someone else comes and wants to buy, it's so hard to sell the land. Unless maybe there's some development that are happening around your land, but those interior lands, it is so hard for them. Maybe now to your fourth or fifth generation, and we have seen cases where people don't want to disclose their wealth about the lands, the different lands that they have to their children, for their own reasons. So I know of a lady friend of mine. They told me in their neighborhood, there was an unclaimed land, and someone out of nowhere came and settled, and they became the legal owner.
Welcome to Power Talk. Today we go on with our financial discussion. We had so much really discussed last week, and we wanted to really go into depth. What is investing? Because we had mentioned a few things here and there that we felt we need you guys to understand, and especially because some people also talked about it and wanted to understand what is investing, what is really what are we supposed to actually do to multiply this money instead of just putting it in the bank account, and beginning to understand how can we build wealth even as young people. So I am joined by my esteemed guest, of course, my good friend, who will introduce herself deeply as we go on, and I know she has so much in store even for today. Thank you so much, and karibu sana.
Thank you so much, Martha, for the invitation. I'm so much honored. My name is Winnie. I am a wife, a mom, and a finance consultant, and above all, I'm also a business consultant. And my goal in life is to make sure there is money conversations in our household and also among the young people.
Wow, so today we are going to talk more about what we began, and we wanted to really understand, because what really boggles people's mind is, yes, I want to make money, but how can I actually make this money? And most importantly, make money that I will continuously have returns. I don't need to just make money once, but how can I make a certain type of amount of money consistently along the way, which is what people call investing. So please tell us more about investing.
Investing is basically the science of making money, as you had mentioned. And anytime that you're investing, I'm hoping you had already saved that money. Now you want to save. I'm hoping that you already saved that amount of money. Now you want to invest. And the first thing, even before you venture into any investment scheme, is to always ask, what is my rate of return? Anytime that you are taking up an investment venture, always take an investment venture that is giving you a rate of return that is higher than the current inflation in the country. So, for example, I know banks, even though you want to save with a bank with their fixed account, they normally gives very little interest on your money. They give in the levels of between 3 to 5, and the 5 is for those people who are investing huge chunks of money. Majority of the banks, that is. So you should always ask, what is the current rate inflation? Currently, the rate of inflation in our country is ranging between around 6 to 7%. So anytime that you're investing, look for an investment that's going to give you a higher return that is above 6 or above 7. So, and I know there are many ventures, for example, the money market fund that we had mentioned in the last week's episode. And so when you're choosing for a money market, you should look for a money market that is regulated, that is, of course, regulated by the Capital Market Authority, and also you should be on the lookout to make sure this money market that I am investing in, is it giving me so much high interest rates? Because the higher the rate, the rate, of course, the interest rate, the higher the risk. So if a money market fund is giving you a higher interest rate, the next question you ask yourself, where are they investing my money? So if it is giving you a higher interest rate, for example, the rates of maybe 18, 20, and other money market are at the levels of 13 or levels of 11. So it means your money is being invested in very risky ventures. So the likelihood of you losing the money is very high. I know this is in the public domain. We saw the cases of Saiton Investments where it's actually a money market fund, and people lost money.
Money market funds don't have, like many of them would actually say that your money is insured. You are likely to still get your money back even if it fails, or there is a very low risk of it failing. What do you think about that? Because that is what they use to market outside here. That one most of the times applies for those money market funds that have, like especially in the insurance industry, they always have a money market fund as a product. So I didn't mention this, but if you're also looking for a money market fund, it's always good to look for a money market fund that has an insurance aspect. So if it has an insurance aspect, so you know automatically your money is going to be insured. But for a money market fund that it does not have insurance, you're not so much sure. They could be, but you're not so much sure that your money is insured. So those are the chances that you're likely to lose your money. But if you get a money market first that is regulated, second, it has an insurance aspect of it, thirdly, it does not give you the very enormous or super interest rates that are not within the current rate, because by the end of the day you ask, where do these people, this money that the money market as a collective fund they are taking from you, where are they investing that money? Most of the time they invest them in the government bonds, and the government bonds, if the rate of the government bonds they are giving to the people who have invested in them, their investors, is around 15, and the money market is giving you maybe 18. So that means it's not investing in a government bond, which is much less riskier. It is investing it elsewhere. So basically what you're trying to say is not all money market funds are legit, probably, or are not. You can actually have a money market fund which is very risky. So I wanted to ask, now those things you're telling me in terms of how I check a money market fund, are those kinds of information displayed to the client, or do you just trust the word of mouth? Because how do I even know that money market fund is insured?
How you know it is let me start with the last question. How you know it is insured is, for example, if it is an insurance company, like we have, for example, CIC, I know Britam have, Sanlam have, there is also I would say Britam, Sanlam, CIC, ICA, Lion, they also have money market. You see all these companies that I have mentioned, all of them, they are actually insurance company. So it would also make sense that they have already insured that money. So basically
it's up to me to do my research.
They
of course don't offer this point blank to you.
Of course it's up to you to do your own research, and also of course you can go online. All these, like the Saiton the Saiton's publication, it was published it is actually in the public domain. If you look if you go to the website or on the Google and search, you're going to get this information. Another thing for the money market fund is to make sure that it's regulated by the Capital Market Authority. So if it is not regulated, you know, that's a red flag. And also you also have the liberty, you are actually at liberty to ask, where are you investing this money? Because they are not supposed to invest more than I think they are around 20% of their fund in one avenue, so that they can give you the rate of return. You also have the capability, or you are at liberty to ask where they are investing your money.
Wow. So basically, money market funds are going to replace banks in the near, like just like AI is doing to people.
Yeah, it's going to replace banks in the sense of saving, but now of course then they don't lend.
They don't lend.
Yeah,
money.
and the core business of the banks is to lend.
Wow. So guys, there you have it. Money market funds is the rising way to actually have even the littlest type of money probably you're not using. Just set it aside and just have another percentage on top of it, rather than have it just somewhere lying and it's not even producing everything afterwards. So even as we go on, guys, I want to remind you that this is Power Talk and we are having the best conversations in town. Today, we have had the discussions on investments. Please, if you have anything in mind, whatever you want to say, whatever question you have, remember to still comment down below, ask those questions. And of course, if you have anything to also add, I believe we also have something we can add. Please comment down below. Like, share, and definitely subscribe. We want to help as many people at all.
Yeah.
So, Winnie,
Yes.
you have mentioned that I want us to go straight into insurance. Even as we think about other investment avenues, how can we actually are insurance investment avenues really? Can somebody say that I will invest money in insurance and get returns, or would you advise somebody to actually have an insurance?
Yes, I would vote for insurance. For example, you can take like a medical cover. That one comes in handy, especially when maybe if you are when maybe you are in a family setup and your kid gets sick in the middle, and maybe your salary, you're not budgeted for this. Of course, you're not budgeted for the child to get sick, but you're not budgeted for that money to take the kid to the hospital. The insurance comes in handy. And of course, if you go to the investment aspect, insurance actually have very nice products. There are some products I know of. ICA Lion, they have a product that you can take you can take for 10 years or 20 years, and the rate of return is actually close to 78% depending on your age. So anytime
78%.
Yeah.
Okay, can you explain that? How would I get a return of 78%?
How would you get a return of 78%? For example, if you have taken that facility today, you've taken for 10 years. See, they normally give you the sum assured as the money that they're going to give you at the end of the period.
Okay.
So that sum assured, if you get that figure, then you minus how much you will have contributed over that period that they have simulated, whether it is 10 years or 20 years, that the difference is the profit that you're getting out of it. That profit, when you annualize it to get the rate of return is actually above 78%, depending on the age.
Okay.
Yeah. So the younger, sorry for cutting short, the younger you start taking up such a facility, an insurance cover, the higher the interest rate. Because as someone of around 21 years starting to take such a product with them, it's going to get a 92%.
Oh, okay. So basically, insurance is a long-term investment. Right?
Yes.
It's not quite something you can say I can bank on to help me become better financially on a day-to-day basis.
Yeah.
Okay, so that's okay.
It actually cushions you in the future. For example, if right now you are 30 and then you take that facility of maybe that product of 20 years, then that money is going to mature when you're 50 years at your retirement age, and maybe you didn't have a proper saving plan. That money can help you, can cushion you after the retirement, because truth be told, once you retire, once you retire, you need more money to survive. Because first of all, there is no regular income that is coming through, and second, you start having those lifestyle diseases or old age diseases. You need cash. You don't actually need a land somewhere that you cannot be able to sell. So you need that cash. So, and if this money comes in at that time, is able to cushion you for that period.
Okay, so now we can go to other platforms where can young people, invest, especially those platforms that are very let me say small money or friendly, because we need anyone who has access to any amount of money, they can be able to put it somewhere and in turn get something out from it. So probably you can enlighten us on that.
Of course, there are other avenues, like for example in SACCOs. In SACCOs, actually the least that you invest in is 1,000. So even though you're being given pocket money by your parent, you can be able to afford 1,000 in a month. So and also for young people, is most of the time is usually in the SACCOs and also the MMF. And for MMF, once you get maybe to around 50,000, you have saved enough to around 50,000. Now you can go to the government securities or the government treasury bills and the treasury bonds. Those are the three avenues that young people have, because and also there's something called rates. It is the like you buy a portion of a real estate. You can buy even with a 1,000. You just invest, like you become a shareholder of that unit, such that anytime maybe there's a tenant who has paid up rent for that month, you're able to be given a portion of that rent. Okay.
Wow, guys, we are learning so much today. I feel like a millionaire already. I mean, I feel like there's so much I can do with what I have, and from today onwards I will make better choices, and I believe the same for you, right? So as we go on, remember to comment, like, share and subscribe. Definitely your questions will help us know what you need to hear even in the next episode. So Winnie, even as we move forward, help us understand. You've mentioned about bonds, treasury bonds, all those things. Those ones, do they require a certain type of amount of money, or can somebody start with what they have?
For the government securities, they are actually in two types. There's the treasury bonds and the treasury bills. The treasury bonds are usually bonds for the long. They're usually government borrowing from us as citizens for a longer period, that is more than 1 year. And the treasury bills, they normally government borrowings for short periods, that is 3 months, 6 months, and maybe 365 days, that is 1 year. So for the government bonds, the bonds that I've said that they are the long term, the minimum that you require is 50,000. That's why I was saying, if you have saved enough money in the money market, maybe 50,000, you can be able to take that chunk and now venture into the government bonds, because of course the bonds are going to give you a higher interest rate than what the money market is going to give you. So we said anytime that you're investing, the goal is to first to get a rate that is higher than the inflation rate. Second is to get if you have been able to surpass the first level of getting a rate that is higher than the interest rate, the other avenue is to try to increase that rate. And the government bonds, we say, even though they're not like zero risk free, but they are a little bit risk free than maybe compared to something like stocks. So if you have 50,000, you can be able to venture into the government bonds. So for the treasury bills or the short-term borrowing from by the government, those ones, they require a minimum capital of 100,000. And then you can have, even though it's not going to be realized at the current, but in the near future, you can have this goal as a young adult. You say, I want to start saving, and once I get to 50,000, I invest in the bonds. Then you do it consecutively for like 6 months. So it means in the next 6 months you're going to be earning passive income, because government bonds, they normally pay interest twice in a year. So, and a year doesn't mean that starts January every time. A year starts from the day that you buy that bond. If you buy that bond today, in the month of July, your year will end next year in July. So at the half year, that is after 6 months, you get a passive income. You get a repayment of interest by the government. Okay.
Wow. I mean, we are still getting there, right? Like we said earlier on, I think in the previous episode, it's about mindset. We have to see ourselves ourselves there, because again, you can't. It feels like getting that 100,000 for somebody who doesn't have anything is very difficult.
Yeah.
But again, you have to see yourself there, and you begin. When you see yourself there, you begin even acting like person who will go there. And you begin saving. You begin doing what it takes to be there. So I think it's very important. I want you to just mention about two things that I believe you love talking about. One is stocks. Please talk about the stock market and also the real estate in your home.
The stock market, let me say that stock market is the easiest market that you can get into because it requires very little money, and another thing, the returns are very huge. If you are able to study the market, you're able to beat all odds of money, all the odds of misconceptions about money, because stock market with 100 shilling, you're able to purchase 1 share. And not in every share, of course, because what happens, shares of a company, they are bought in lots of 100. You can't buy like 220 shares. You can only buy like 300, 400, lots of 100. That's it. And if a share is costing like 0.8 cents, you see, with 100 shilling, you're able to buy. You're able to buy
80 stock. 0.8 cents.
0.8 cents.
Okay.
You're able to buy 100 for that company, and you become a shareholder. So basically what happens, if you become a shareholder of a company, it is up to the management and the employees of those companies to work day and night to ensure that you get...
So if they fail, sorry.
Excuse me. It is up to the employees of that company to make sure they are working day and night to give you a better return, to make sure that you're going to add more shares, you're going to subscribe to their more shares. That's how the stock market works. And for you to know which stock to buy, always make sure you study the company. You know this company is in which industry. You study the company very well, and by studying the company, I know you'll be versant with their financials. You know when is their financial year, when does their financial year end. Do this company pay dividends? Do I want to be a long-term investor? Do I want to be a speculative investor or a capital gain investor? So you just can't say, I have 100 shilling or I have 10,000 shilling, now I want to buy in stock. Is it the right time to buy? Because people have this misconception about stock, that stock is a game of gambling. But if you do your own due diligence, if you're able to know which stock I want to buy right now, of course you have already done the background checks. You're able to know that this is the right stock and it is the right time to buy, or it is the right time to hold this stock.
Wow. So guys, buy stocks. Stop just buying socks and shoes and stuff. Just buy stocks. And every other thing is you plan to pimp yourself up, pimp your bank up as well.
Sure.
So real estate, do you think it's a thing nowadays?
The question that I keep asking myself, if I buy maybe a land, let me see, like somewhere so much interior, will my child be able to go up to those places to buy, like to stay there, or will they be willing to go and maybe continue with the investment? So for right now, we are in the 21st century, and I will say our babies are digital babies, and they want places where they can utilize their digital knowledge to ensure that they're generating more income. Yes, land was a very good investment back in the days, but right now, even though you buy land, it just holds cash. Before it appreciates, or before someone else comes and when he wants to buy, it's so hard to sell the land. For example, maybe you bought the land and you wanted to say, I'm going to sell this land when my child reaches a certain age to go maybe to the university, maybe abroad. But you try to sell that land is unable to be sold, or it may take forever, or even trying to recoup back your initial investment is so hard.
It's just like a little gamble, because you never know. They say it always has interest. The interest becomes higher as well. But I also see it takes a long time for it to really give you that interest. Unless maybe
unless maybe there's some development that are happening around your land, but those interior lands, it is so hard for them. Maybe now to your fourth or fifth generation, and we have seen cases where people don't want to disclose their wealth, the lands, the different land that they have to their children, for their own reasons. So I know of a lady friend of mine. They told me in their neighborhood, there was an unclaimed land, and someone out of nowhere came and settled, and they became the legal owner. And we have seen time and time again they are on the TV. There's this called the unclaimed assets, and I know a bigger chunk of that unclaimed asset is the land aspect. But if you are open with your, now going back to our conversation, if you are open with your children when they are young, this, you explain to them, this is how I've been able to get all this wealth, and this is how I've been able to build this wealth. That wealth is going to go generations to come. Right.
So as we conclude, I want you to probably in a very shortly to just tell us, how do you differentiate between what I need to invest in and this is right, this is wrong? How can I tell when I am almost investing in something that is likely to either be, like you're saying, extreme risk, or even promising things that are not going to be there? How will I differentiate between what I should invest in and what is probably tricky, or even very, how do you say it? It's trickery. It's just people using those words, but they're taking your money falsely.
First of all, I would like to urge every person, even though whether you are young or old, every time that you want to take up an investment venture, always do your own research. Know this person. You see, like the way companies always ask for your details for the KYC details, the same case you should know the kind of venture that you're entering into, and always have this mindset that anytime that I'm investing, if the return is so high, of course the risk that is involved is also high. So always make sure you do your own research, because we cannot tell you invest in this company because all of us, they have different risk appetites. Maybe I'm a more risk taker, but do I do my research? Do I do my own research to make sure that whichever venture that I'm venturing into is going to benefit me in the future? Because if you don't do your own research and you come, I know there have been these companies that, or these ventures, investment venture that tell you come you're gonna deposit money and we're going to get super normal profits, or you're gonna get huge gains. You always ask yourself, where are they investing my money? If they are able to know where they invest in your money, from knowing where they're going to invest your money, they build your trust. But if you don't know where that money is being invested, that tells you that this person is likely to dupe you, and this person is likely to get money out of you and or most likely con you. But the bottom line is always do your own research. Start investing, because I know there's this guy called one of the richest guys in the world, Warren Buffett. He started investing when he was actually 11 years. So, and you can see where he is right now. So you can see that building wealth is not a one day that you get millions all over overnight. It's a process, a step-by-step process that helps you to build your wealth.
Wow. So there you have it, guys. Wealth is not something you can just eat, you just get from nowhere, or it just shows up. Today you're poor, tomorrow you're rich. In fact, anyone who ever goes through that process never maintains that. So you have to do your research. You have to do what it takes to know, is this enough? Is this something I can do? And is this even legit? Otherwise, it has been good having you, and especially my guests. Thank you so much. Such a well of knowledge. We should have you as often as possible. As long as you are available, we would love to always have you, because this is something that will change generations, as you're saying, because the biggest issue is poverty. Poverty, more than anything else, it's poverty. Otherwise, just give us a parting shot and then we can conclude.
My parting shot is to always do your own research before you take any venture, and don't be afraid to start, and don't be afraid to say I'm too young to start investing or to start saving, but just start. Even though you have 100 shilling, the end goal is to begin. That's the end goal. Yeah, just start.
This is Power Talk, and thank you for joining us today. See you guys next Monday. Have a blessed week.